gentlemen, welcome to the Hong Kong Web3 Festival 2025, organized by Wanshan Blockchain Labs and Hashkey Group. I'm Pinky, your MC for today. In this morning, we will be discussing the topics on crypto finance. 尊敬的各位来宾、各位业界同仁，上午好！欢迎莅临由万象区块链实验室 Hashkey Group 联合举办的2025香港嘉年华之链海潮汐加密金融分论坛。我是今天的主持人 Pinky 罗佩琪。在这里，我们将共同关注加密金融的发展遇到的挑战和机遇。我们很荣幸邀请到业内的顶尖专家，他们将加密金融热门的话题进行分享与讨论，深入的探讨机构级资产托管合规方案以及跨链聚合交易技术突破，让投资者见识加密金融从散户主导迈向机构化的关键路径。请将热烈的掌声先给我们今天到场的所有专家还有嘉宾。Please give a big round of applause to our guests and experts. 现在让我们根据预定的日程展开今天的活动。In this session, we will have industry experts to share their insights and expertise on crypto finance. And through the discussion, we can foster the development of crypto finance. Let's get off today's dive into crypto's core philosophies. Please welcome our first speakers, Jupiter Zhang, partner at Hashkey Capital. His keynote speech is titled "The Conviction in Crypto: Why BTC and Ocult Still Matter." 有请。
Morning, everyone. It's a Sunday morning. It's not easy for you to join our meetings. So today's topic is quite easy. Why the crypto bull market continues. So as we will navigate the landscape, dynamic landscape, we need to understand the driving forces behind the crypto markets and also the opportunities that lies ahead. Okay, so I think the key aspect of behind the crypto market is definitely the macroeconomic. I think which is drawing a key notes on the Trump's policies recently. First of all is immigration policies. So Trump has a harsh immigration crackdown. So it will be equivalent a loss of nearly 1 million workers from the US. And also the second is Trump has imposed a very severe tariff policies towards all the trading partners. So all the trading partners have now in the negotiation process or have a retaliation process with the US. And also the Trump's tariff policies have heightened the volatility of US market. And also this Friday, China has imposed a countermeasure policies against U.S. strategies, which will be effect in April 10th, which are adding 34% of the duties on the U.S. goods imported. So this will causing a chaos in the crypto market and also in the traditional market. Also, we see the first aid policies will include physical policies, and there will be a tax rate of 100 billions and also dodgy in spending reductions of approximately 105 billion per year. And also, Trump administration has also launched a crypto-friendly policies with covering topics from the Bitcoin reserve, also the OCC relaxations regarding the banking services, and also the SAB reductions. So if you look at the Trump policy timelines, the anti-growth, immigration, and tariff measures will be implemented first. So that's causing the volatility of the market now. And maybe it will continue to the second quarter and also the third quarter. But the pro-growth policies will be implemented on the fourth quarter, especially on the tax cuts. So it will be having a positive effect on the total economy. And also, the policy uncertainty has increased to a historical high since Trump took office. On the left side, we can see the US economic policy and trade policy uncertainty climb to an all-time high. And also, markets are worried about that US effective rates, tariff rates will be soar to a new high post-World War II. And also, the policy uncertainty has an impact on the soft data. So the tariff frictions have led to a significant deterioration in the soft data of entrepreneur and also the consumer confidence. So from private department, the consumers will have a lacking of consumption intense because of the expectation is low. And also the entrepreneur confidence, they have delayed their decision on the investment, also the capital expenditures. But if you look at the data in another perspective, the hard data such as employment, consumption, and also business spending still remain resilient. So that means currently only the confidence has been impacted. But actually, if you look at the hard data, the employment rate, the non-farming payroll are still stable. And also, some sell-side companies like Goldman Sachs and also Morgan Stanley has lowered down their estimate for the 2025 US GDP growth from 2% to 2.5% to a level of 1.5%. And also, we see the biggest gap since the beginning of this year is the collapse of American exceptionalism, which we see the macro pessimism recorded its second largest 1 month increase since 1994. And also investors are pulling off their money from US stocks in record numbers, with allocation to US stock down 40% month to month. So that's why we see the US market is so volatile recently. And also, you see why we need the tax cuts. So tax cuts and the deregulation in the second half of this year could still happen. Because US physical deficit remain high. If you look at the number between the primary deficit and interest, the interest will be going higher and higher. So that's why the US government is now focusing on reduct the government expenditure recently, and also the Dodgy Efficiency Act. So if this will be solved, and the U.S. physical deficit will still can be solved, and also we see the U.S. public debt sustainable issue will still remains. We didn't see any effect method to solve the problem, but actually Trump administration is having a lot of measure on it, like Dodgy, like also the tariff, and also other kind of things to adding the revenue from U.S. governments. So I think animal spirits will still be spurred at the next half of a year. If you look at the crypto markets, from a negative perspective, the BTC sentiment indicator turns extremely bearish. The 7-day BTC optional risk reversals has been triggered a negative 2 times standard deviation. And also we see from the future market that open interest for the BTC futures on major exchanges has declined 25% compared to 3 months ago before the election happens. But however, we see the sentiment has been signaled some positive signs. The first is, in this cycle, investors have been bearish regarding their BTC funding rates on products on mainstream exchanges. BTC funding have been lower than the short-term treasury yield, and about 4%. So in this cycle, every time that the BTC funding yield lower than the future funding rate, lower than the short-term U.S. treasury yield, may signal a market bottom. And also, we can look at the BTC market. Everybody talk about the outflow from the ETF market, but I have to say that more than 1/3 or nearly half of the BTC ETF funding are coming from the arbitrage players. So recently, we see that the contango of the 3-month futures of the CME futures have been falling to the level of 2022 October levels, which means there's a much more slow and a thin level for the future arbitrage activities. And also we see, along with the price correction of the BTC ETF outflow are coming along with the future basis coming down. So we can see that recently the outflow of the ETF are mainly caused by the arbitrage between the BTC futures and the BTC spot ETF. So there's no clear sign that 4-year cycle of BTC will be impacted. And also in this cycle, everybody may notice that the BTC has been purchased by the ETF and also by the MSTR by nearly 60 billion US dollars. So this is new drawing powers for the BTC price. And also, if you look at the BTC holder sentiment, we will see more brighter pictures for the BTC holders. The first is long-term holders start to sell less at the bottom. If we can look at these pictures, the long-term holders are selling or distributions in the red area, in these 2 red areas, around 2 million BTC. And also in the green area, long-term holders are accumulations. So I've been selling 2 million BTCs, but also they are accumulated around 1 million BTCs at the same time. So now they are still in the mood to accumulation, not to selling it. And also if you look at the short-term holders, their near-term earnings have been going to a historical low, which means the short-term holders for the BTC, they are not losing more money. So their profitable courses for the BTC will be reversed in the future. So that's why we see the BTC holder sentiment is showing a very good sign of reversal trend. And also, if you're talking about the future monies, so different kind of incremental funds. The short term, we have listed companies, MSTR, ETF, more than 70 listed companies purchased BTC this cycle. And also MSTR has its toolbox, Strike and Strive. And in long term, you are still talking about the strategic Bitcoin reserve, which will have a potential buying power of a million BTC in the next 5 years. So still in the discussion between the parliaments, the Congress of the US. Also, we look at the ETH. So there may be some reform dividends. So people can see more insights from Vitalik in our Web3 festival these 2 days. But in our perspective, we will see positive from ETH coming from the technology upgrade, with a Pectra upgrade maybe in the second quarter of this year. And also approved ETH stakings this year, which can be quoted by the BlackRock's head of digital assets saying that staking of ETH could be a huge step change for the Ether ETFs. And also the potential paying taxes from layer 2s to layer 1s. And also recent government changes for ETH, and more focusing on the technical background. So the recent senior executive, Wang Xiaowei and also Thomas, they are both technical backgrounds. So the final question for the ETH will be, when will deflation returns? We can see from after the merge, ETH is experiencing a deflation period, but starting from March last year, it's going to inflation. So we need to pay attention to the lines when the supply of ETH will be reduced in the future. Also, DeFi is very promising. So DeFi will be supported by 2 factors. First is sustainable buyback support over time. So recently, leading DeFi projects have started to implement buybacks, which will provide a robust support for their token price. And also, this including the notable projects like RV, Jupiter, and also the new entrants like Hyperliquid. So we anticipate that their increased revenue potential will make an impact for buybacks even more significant in the bull market. And also, it will be supported by RWA and new narratives. So why RWA? First is because of institutional targeting. With RWA have been emerged as a key allocation direction for institutional investors. So asset managers like BlackRock and also Fidelity has started to focusing on the RWA sector and have launched related investment products. And also we see the RWA interest will also appeal for the investors. The stablecoin of most real DeFi protocols have dropped between 2% to 4%, while in the contrast, the yield on US bond within RWA can remain above 4%. So this shift positions RWA's assets as a new yield source in DeFi, attracting a significant capital into the sectors. Also, stablecoin sectors, the market is expanding rapidly. Stablecoin play a vital role in payments and also cross-border remittance. And that is the foundation of decentralized finance and blockchain applications. And also, it will be an alternative for the unstable local currencies. Also, major players are eyeing on the stablecoins because of stablecoins' high efficiency. Companies like PayPal, Stripe, Robinhood, and also Visa have played a role in this field. And the stablecoin transactions volume has surpassed Visa volumes in the last year. Also, not to mention its ultra low cost compared to the bank-to-bank transformation. So for all the events, just two examples. First, Ripple. It has a technology upgrade, its sidechains, and also ecosystem expansions. Also, Ripple launched its stablecoins RL USD, which will be launched last year. And also the regulation and the government turning points for the Ripple. We have already seen that ICC will drop the lawsuit with Ripples, which will be giving a lot of rooms for the Ripples. So we're changing the market mindset from a pure tokens of high-risk asset to a compliant payment instrument. Also Solana. Solana also maintain technology leadership in the field. We can see the economy is still strong with the TVL maintaining high level historically. Also the US easing and institutional funding will pumping up the whole ecosystem. We have already seen Solana CME future already been approved. Future ETF have also been approved and also the spot ETF are on the way. Other events, we see many tokens have been applied for its spot ETF in the US market. Litecoin, Solana, XRP, Dogecoin, Harbor, Polkadot, Sui. So we will see at least 3 of the tokens will be approved spot ETF this year. Also, we cannot ignore the relaxation of the regulation. The banking and the financial regulators have relaxed about crypto assets. The SAB 121 have been redeemed. Also, the ICC Crypto Task Force has a 10 task focusing on relaxation of the crypto industry. And also, the OCC attitude is now clear. The banking institutions in crypto can now have services towards the institutions who want to involve in the cryptos. Predictions are maybe not necessarily correct. So blockchain-based and crypto asset-oriented AI agents expect to be emerge as a major trend. Also some price predictions. Also, by this year, at least 3 additional crypto assets will be approved as ETF. And also real-world asset and stability. Stablecoin will become the most closely monitored area for the traditional institutions alongside with the risk of institutional DeFis. But also some risk. So if the probability of US session rise significantly, and second, traditional investors, institutions are less interested in the crypto. And 3, policy easing fell short of expectations. And 4, buying funds dried up. But people pay attention to the recent tariff issues. But as Michael Saylor has been saying that there's no tariff for the Bitcoin. So Bitcoin may be a hedge for the current chaos situations. That's all my sharing. Thank you. Thank you for joining us.
谢谢 Jupiter 的精彩分享，请就坐。Thank you, Jupiter, for that insightful perspective on crypto convention. 接下来，让我们邀请另一位的嘉宾 ，Let's bridge to our next speaker, Jeff Keith of PancakeSwap CEO. Her keynote speech is titled Building the Future of DeFi. Please give a warm welcome. Please, Chef Keys.
Test. Okay. Hi everyone. Yeah, as Jupiter said, it's never easy to come to listen to such an early sharing at Sunday morning. So welcome everybody. Appreciate your presence here. Firstly, a brief introduction about myself. This is Chef Keys at PancakeSwap. I'm currently the CEO for overseeing the whole operation of these protocols. I have been in this DeFi sector for many years already. And I think one of the things, or on every conferences, on every event, everybody's, the key focus of the topic is how we can make DeFi more accessible, more efficient, more convenient for users. That's a lot of people ask why, because I guess that's the topic, close to, our heart, to every crypto or every DeFi builders. So here today, I would like to walk you through how PancakeSwap is playing the role in the whole process and how PancakeSwap is trying our best to differentiate ourselves with the other DEXs in the sector. And then we can firstly go through where PancakeSwap are, where we're standing right now, via several figures. So we're kind of ranking #1 DEX, by 24 hours and 7-day trading volumes. And as of today, we have already have $1.2 trillion in cumulative trading volumes, and we have more than 1.6 billion total value locked on our platform. And also so far, we have served more than 120 million users on our platform. These figures or these numbers are not just the statistics. They are kind of the number, the figure that tell us the whole DeFi at which scale that we can change the financial finance. It's not only the figure that represent PancakeSwap can do. It also represents what's the whole DeFi sector, what we can achieve together. It's also the numbers, that encourage PancakeSwap, encourage every people, in the sector to building further, because we say these figures are there. Their users are using us, their volumes are accumulated on us. And then I would like to take a minute to talk about PancakeSwap. What exactly is PancakeSwap? What kind of service PancakeSwap is providing? Because traditionally, people will think PancakeSwap is only a DEX, a decentralized exchange platform on BNB chain. But actually, in the past 4 years, we have evolved a lot. We're more than an AMM model DEX, only. So here's kind of an overview of our ecosystem. We have trade functions, we have earn functions, we have play sector, and also, most importantly, we have token launch platforms. I will walk through one by one first. For the trade, previously, or 4 years ago, when we were incorporated, we started from AMM DEX, which is an automated market maker DEX. So people can trade, or people can do a swap, on PancakeSwap. And right now we have, different version for trade. We have version 1, version 2, version 3. For version 3, there are several key major updates. Number 1, for the liquidity provider, you can limit your price, or you can limit your fund into a very specific price range, and then you can get them or can maximize your return as a liquidity provider. And also for experienced traders, we provide perpetual tradings, on-chain, which is also, from our internal data, it's very popular, it's very welcomed by users, because we can see perpetual is already the second largest product contributing our revenue and trading volumes. And also for the fiat on-ramp, is kind of to make the whole DeFi pipe bigger, because there's still a lot of Web2 users, they don't have too much understanding of Web3 and also DeFi. So they were trying to use their, buy the first Bitcoin or buy the first crypto via their fiat money, via MasterCard, via via credit card or via their banking channels in different jurisdictions. And this is what we do via the Fiat on-ramp channels to bring the Web2 users to Web3. And the bridge is because currently PancakeSwap we're operating on 9 chains. You can use PancakeSwap from 9 chain networks. So there's always a requirement, or there's always a market. There's always a need from users that need to bridge their assets from different chains. So that's where the bridge comes in. And then the second part is earn. So liquidity is kind of the backbone of PancakeSwap or of all the AMM DEX, because we are relying on the liquidity provider to add in liquidity to PancakeSwaps. So that's where the liquidity part is. On this we provided farms and also position managers. For the second part is staking. Staking is a very popular concept in DeFi because for most of the protocols, for most of projects, when they are TGE'd, when they have their own tokens, the first thing is, or the next step for them is to understand how we can empower our tokens, how we can bring more use case for our tokens, how we can encourage user to hold our tokens. Then the key part is stake. A lot of protocols will bring in locking system to encourage people locking their cake back to the protocol, and then they can give back a certain revenue share or buyback to the token holders. This is also same thing on PancakeSwap. We have cake staking and also we have Cerepool. So Cerepool is basically a partnership between PancakeSwap and different protocols. So we have a lot of Cerepools on our platform already, and the users can stake cake and get certain popular tokens as well. And the play part is we're just trying to give our users some fun. And then we have 2 products right now. We have prediction, we have lottery. So prediction on BNB chain, basically you can predict the BNB price for every 5 minutes. And for lottery, it's just to kind of have a bet on chain, because it's also a very popular product in traditional finance. And then the last part is token launch. Token launch is not very known for PancakeSwap, but actually it's a very important component for PancakeSwap, because for a lot of protocols right now, they are in the center right now. There are so many entrepreneurs, there are so many builders, and everybody want to create their own project. Everybody want to launch their own token, and normally they want to have a certain platform to help them to do the first fundraising. That's exactly where we're coming from for token launch. So we have 3 products. The first one is for Springbot. Springbot is a very new product for us, and every even individual person, myself or my mom or my grandma, they can come to PancakeSwap to issue a token in several clicks without any coding needed. This is kind of to break down, to break the technical barriers for a lot of people who don't understand how to code, right? And then for the IFO and the TGE, it's a very traditional product. For the TG, is a product we're working together with Binance Wallet, where we're trying to empower a lot of people, or a lot of protocols who want to come to Binance Wallet to do the first token launch. I should say it's a very popular or successful product so far, because every time we're doing the TGE with Binance Wallet, we can say the oversubscription is like 100x, 200x. So we can say there are still users needed, still users is very into this product. And then after we see the whole overview of our ecosystem, I would like to deep dive a little bit to our more advanced feature on BNB chain. Why we want to highlight BNB chain? Because PancakeSwap has been operating on 9 chains, but the BNB chain is our home chain, is where we started from. So we normally will enable the most comprehensive product and service on this chain. So I'd like to deep dive a little bit. It's still 3-part: trading, token launch, and cross-chain. For trading, apart from what I described earlier for the key features, here's something new I want to bring in. The first one is the MEV God. MEV attack has been an issue for a long time in the DeFi sectors. And also, especially when this season the meme coin is quite popular, and then a lot of individual users will complain they are already they are attacked for many times. So the MEV Guard is a partnership between PancakeSwap and different wallet. Now if you come to PancakeSwap website, you can click just the one click, right? And you can enable the MEV protection for different wallets, or for most of the major wallet, like MetaMask, Trust Wallet, and also Binance Wallet. And Telegram Swap Bot is a trial for PancakeSwap this year, because for PancakeSwap right now we don't have mobile app, but we firmly believe in the future mobile trading is kind of everybody is going to use their iPhone, their phone to do the trading, but not everybody has the extension or the web version. So that's the reason why we're trying to bring the trading from PancakeSwap to users' Apple Wallet. So we're working together with Telegram to bring the swap bot to the ecosystem, and then users can only do the swap within the Telegram without leaving the app. PancakeSwap X is a product we're still working on. They're trying to bring the offline market maker to the on-chain tradings, and then where users can actually not only trading in the on-chain pools, but also with several market makers to give them gas lists or to give them MV protection as well. On the token launch, already briefed, in the last sector, so I'll not go to too much details. And the cross-chain is the Binance, it's the PancakeSwap bridge. It's also trying to work together with BNB chain to help users cross-chain, to bridge their assets from different chains to BNB chain. And then what's next for PancakeSwap? So here I would like to introduce one of our new product called PancakeSwap Infinity. PancakeSwap Infinity is the next version of our trading. Because previously we have version 2, version 3, and right now we are ready for the next version. We call it PancakeSwap Infinity. Why we call it Infinity? Because we do see there is endless possibility, because it's kind of an open platform, can enable every different protocol, different builders to come into PancakeSwap to do the building, and then can create a lot of fancy, sexy features to our users. Here are several key points. First is the multiple types. The second one is hooks, and the third one is the custom fee structures, and last one is guest options. I will not go into every one of them, but I will choose the first two, the multiple pool types and the hooks. The multiple pool types, right now on PancakeSwap version 3, every user's fee structure, the fee tiers, the pool type is fixed. Even though the whole DeFi, we have been in DeFi for 4 years, but until today, the trading experience is good, but it's still a little bit rigid. Right now, if I'm a user, I'm experienced users, and then for a newbie as well, the fee is exactly the same. That does not make too much sense. So on the PancakeSwap Infinity, we're going to provide 2 pools, which is the first one is concentrated liquidity pools. The second one is liquidity book pools. These more pools will give users more choices. And also what's more excited is these 2 pools is only a starting point. We're going to have more pools in the future. And the second thing is about the hooks. Hook is kind of, and it's a smart contract built by external partner or built by external builders based on PancakeSwap Infinity to give the users more customized feature. For example, at launch, we're going to bring an in-house hook and also several partners hook. I will choose one to share with you. Right now for PancakeSwap, one of the issue is how to encourage people holding cake, how to encourage people to holding our tokens, and then we can share more revenue back to them. So one of the feature is, if you are holding cake and if you're holding cake and trading on PancakeSwap, your fee is different. You can have a lower trading fee and also have a lower gas fee even. So this kind of things is trying to attract or to holding users together with PancakeSwap. And then that's kind of all the things I want to share with you today. But also we are ready to building the futures together and welcome every people, especially the builders, to come to PancakeSwap Infinity, especially the hook developers, and then we can join together to reshape the DeFi futures together. I think that's all the sharing. Thank you.
Thank you so much, Chef Keith. Thanks for your great talk. Please be seated. 谢谢你的精彩分享，为我们提供了宝贵的思考维度。Now, let's shift to another topic and maybe invite Alessio Credili, CEO and co-founder of Hash Trust, for his keynote, Trust, Money and Responsibility. Please.
Hello. Good morning, everybody. Trust is the invisible currency of every financial system. Whether the system is based on blockchain or whether the system is based on central banks and banks. What I would like to do today here is to dissect the concept of trust and how trustless systems are a mirage, how responsibility cannot really be completely automated away, and how the only successful future for Web3 is to marry decentralization with real-world trust. My name is Alessio. I'm the CEO of Hash Trust. We actually started here in Hong Kong around 8 years ago. As a custodian, today we are a global investment bank with more than $5 billion in assets under custody. We have presence in Hong Kong, in Asia, in Middle East, in Europe, with full licenses in Hong Kong, Singapore, Dubai, Italy, and France. Trust is not just part of the name of the company. Trust is really the proof of our work, to put it this way, and that's what we are going to unpack today. So let's look into that. I think the dirty secret of cryptocurrencies and crypto market is that we all hate centralized authorities. We hate centralized authorities because they censor transactions, because they make decisions behind the doors, because they are not transparent. I mean, we looked at the LIBOR rigging, FTX, all the same stories. However, still, if we really look at the crypto market, we still rely on centralized authorities. We saw the presentation before about PancakeSwap, but I mean, look at the reality. 90% of the volumes, trading volumes, are still on Binance and Coinbase. Try and sell $1 billion of crypto on a decentralized exchange, you will still need centralized market makers. And the reality is that when FTX and Terra collapsed, everybody went crying back to the centralized authorities, the regulators, to recover the money. So we don't really hate the centralized authorities, we hate their bad incentives. To understand what really centralized authorities are, we need to really categorize them into different categories. So to me, there are three types of authorities. The first ones, they are imposed to us. There's actually nothing that we can do about them. These are like the AML policies. These are the capital controls, the tariffs. These are the military forces. They're just imposed on us. We cannot do anything about them. If we don't respect them, we go to jail or worse. The second ones are the ones that we choose. We don't really want to take care of every single pothole in the city. We don't want to manage the firefighters. We don't want to audit the accounts of every single hospital in the city, right? So we choose to delegate some of this responsibility to somebody else. The third category is the one where, until today, there was no alternative. If today you want to buy a house, there's no way that you can do without a notary or the real estate registry. If you want to send a message to your friend, you still need to use WeChat or WhatsApp. Well, here's the good story. The positive one is that blockchain can actually smash this category. We can actually upgrade these centralized authorities where until now there was no alternative, and we can do better without them. So imagine a world where instead of using Mark Zuckerberg or Elon Musk, We can have a DAO controlling social media. Instead of relying on somebody else for the real estate registry, we can do it on chain, right? And we have governance that regulates all the responsibilities around it. So it's a new paradigm. It's a system that can be controlled and owned by the user. What does it mean? It means that the user of the system is not just the user like it is today, and there is no centralized authority that monetizes the work of the users. Whoever is using the system is also the person that actually takes advantage of the system and shares their revenues. What does it mean? I mean, just obviously there's a lot of literature about this, but a simple fact that everybody understands, right? In the traditional world, Web 2, the take rates are extremely higher than in Web 3. Why? Because in Web 2, there are centralized authorities that basically extract all the value leveraging our work. In Web 3, the revenues are shared with the community, and then the take rates are much lower. But this is not just a positive thing. Obviously, decentralization doesn't work for everything, but it's a little bit different, because once you decentralize something, decentralization comes with responsibility. And responsibility means that you actually need to do something to maintain the system. It means that you're part of the decisions about security, about scalability, about how a system should work, etc. So you're not really getting rid of the authority. You're just trading a problem with another. You're trading human failure, like in the case of FTX, for code failure, like in the case of Poly Network. You're trading banks bailout with your responsibility to keep the seed phrase, etc., etc. So it's not just complete freedom from centralized authority, it's just work with some kind of benefits that you can extract from the system. So in this kind of system, we said we're actually trading something with something else, but we could easily argue that, all right, maybe we can use technology and technology will improve, so we actually can improve the trade-off between the centralized authority and the decentralization. Instead of having a seed phrase, we can share the seed phrase, we can have, what is it called, the social recovery practices, etc. We can use, we saw in the previous presentation some kind of protections against MEV extractions, etc. But do we really need to go that far? Does it really work? Does it really make sense for us to take this trade-off and getting rid completely of centralized authorities for something that might not be optimal? Well, in my view, we don't really have to do it. There's another choice that is better than this. To do this, we need to really go back and understand what are we creating here, right? And what money is. Let's go through a little bit of history. To build an analogy, let's use the analogy of blockchain technologies, and let's use different layers of technology. So if money, fiat money created by central banks or gold is layer 1, what is layer 2? Layer 2 are basically the scaling technologies. In today's world, when we take the NTR, when we go to the airport, we don't really use money. Money in the sense of IOU against the central bank. We don't really go on a trip using gold. We use scaling technologies, which is the octopus card, which is pay me, etc. Right? These are kind of separate ledgers that actually work only with users that are part of those ledgers, exactly like Polygon or other layer 2 technologies that we use in the blockchain world. That just make the layer 1 more fungible. But the layer 1 doesn't just exist by itself. It's based on something, and this something is called, if it works, it's called credit, right? We need money because there's a credit relationship with other people. We need credit because people and corporations borrow from each other and create this kind of system of trust and accountability between borrowers and lenders. Without credit, we don't really need money. Money is just a way to make credit fungible. And credit, we cannot have credit if we don't have trust, right? So no trust, no credit, no need for money, no need for scaling technology. And trust is really at the base of the human society. If we don't have trust, we don't have a human society. So how can we create a new monetary system without trust if we cannot have a human society? Think about a very simple example. Yvonne, when you go to a party, a birthday party, what do you bring? You bring a bottle of champagne or something, right? At the birthday party, you kind of expect that the host of the party will give back some snacks, maybe a fun party, and at the same time, you can drink beer or Coke Zero at the party. You don't really quantify how much money you're getting back from the host of the party. And at the same time, you don't expect the host of the party to pay exactly for your bottle of champagne. You could do it, right? You will extinguish completely your kind of monetary transaction with the host of the party. But what kind of party would it be? Would it really be a party that you want to go to, where your gift is paid by the host, and where you need to pay exactly for what you consume at the party? That's not how human society works. If we don't have trust, if we don't have this kind of credit society, we don't have a system where we're able to build a factory. We don't have a system where we're able to build a startup based on the trust that the venture capitalists give us. And we cannot pay for our college education, right? So the whole banking fractional system, the whole society is based on this system. And that's not what we really need to destroy. That's what we really need to build upon. If we look at Bitcoin, right, we haven't really changed much. Bitcoin is just a new layer of money that is not based on central banks. It doesn't mean that we will not use Bitcoin or stable coins to settle transactions that are used to make credit and trust fungible. So there's no other system that we can go back to. There's no central authority, there's no central bank that we need to eliminate. We need to find a system that is based on what we already have, but it can leverage the advantage of decentralization and blockchain. So going back to really the beginning, I want to leave you with a message. The future is not really to eliminate trust completely. This is not going to work. We're not going to be able to scale. We're not going to be able to build a system that will be used by the majority of the people. If we do that, we will not have a human society, and good luck with that to really change the way we do things. We don't need to eliminate trust. We need to upgrade trust and leverage the best of the two worlds. Thank you so much, and have a great week ahead.
Thank you so much. Thank you, Aliso. Please be seated. We hope that through Aliso's sharing, we can have a better understanding of this topic. 接下来我们会进行圆桌讨论。今天我们有不同的专家到场，为我们分享他们的观点。Now, let's start our panel discussion. Please give a warm welcome to our experts. Kevin Lee, co-founder and managing partner, L2 Iterative Ventures. Sean, founder, CEO, RateX. Curtis Portmark, Chief Business Officer of GrowX Root. Sam, Token Pocket, COO. Terence An, founder at Hyperplex. 他们圆桌讨论的主题是 DeFi 的下一站跨链交易基础设施与用户体验的革新。The topic of the panel discussion is DeFi Next Frontier, Revolutionizing Cross-Chain Infrastructure and UX. Please give a warm welcome to our panelists. 请给予热烈的掌声欢迎，谢谢。
Good morning, everyone. Good to see everybody here on a Sunday morning. Today, we're here to talk about DeFi, the next frontier, revolutionizing cross-chain interoperability, infrastructure, and UX. My name is Kevin Lee, and I'm today's moderator. I'm the managing partner of L2 Iterative Ventures. Maybe I'll start off with having the panelists give a brief introduction of themselves, and then we can kick off the panel. Why don't we start with Sean?
Hi everybody, my name is Sean and I'm the founder and CEO of RateX. RateX is the world's first margin yield trading protocol building on Solana right now.
Hello, good morning everyone. My name is Curtis, Chief Business Officer from BlocksRoute. So BlocksRoute Lab is a company that we do network layer technology on blockchain. And since 2019, we released our blockchain distribution network, and it has always been the fastest data acceleration network in the industry. We're well known in the MEV and DeFi space that we're providing speed and performance to a wide range of projects.
Hey, hello, it's Sam from Token Pocket Wallet, and I'm in charge of the marketing and operations. So, actually, it is very excited to share that this is the 7 years anniversary of Token Pocket, and Token Pocket is a world's leading multi-chain self-custodial wallet, and we built from 2018. And we currently are one of the top 2 wallets on Charm Network and BNB Chain networks, and we already serve for over 30 million users already. And yeah, the monthly active users is 3.5 million. Thank you.
Hey guys, I'm Terrence. I'm a former HFT trader, and I have 0 users on Hyperplex, so it's very impressive that I get to meet with you guys. But Hyperplex is all about building sophisticated financial derivatives. We think there's too many protocols that are just different variants of how do I buy this token, how do I sell that token, and it's about time we actually have some financial sophistication and utility. So Hyperplex is all about building positive gamma on-chain, which allows you to organically create any structured product, any equity premium structured product directly on-chain. And then we also have another product called BERV, which is our long-term play for handling interest rate derivatives. So yeah, the combination of the two should really push the industry forward in terms of the technology we have.
Thank you. And for those of you who are not familiar with L2 Iterative Ventures, we are actually an early stage venture capital firm based out of the Bay Area in San Francisco and Hong Kong. So we invest in early stage projects in the DeFi and infrastructure space in Web3. So maybe let me start off with a question around cross-chain interoperability. So we all understand that Ethereum, Solana, and recently Sonic and Bearchain, they all have really vibrant DeFi communities, right? But there's still so much to do in terms of making it cross-chain, seamlessly talking to different blockchain ecosystems. Can you guys, each of you, tell us how your projects actually enable more seamless integration across blockchain ecosystems? Maybe we'll start off with Sean.
Yeah, I think it's a very good question because we have already seen the liquidity is highly fragmented and across several chains, not only Ethereum, Solana, Bearchain, and even Arbitrum or OP. So I think it's pretty difficult for a DeFi protocol like us, especially for RateX. We are building for liquidities. So we're currently building on Solana, and we'll also expand to EVM ecosystem this month. So we need to deploy 2 separate programs, and we spend a lot of time and the resources on building 2 programs, both on EVM and the SVM. So I think that's the difficulty for nearly all the developers, especially for DeFi builders. I hope that probably one day there are a good chain abstraction layer that can be here for all the DeFi users or builders to build on top of it. Yeah, that's my thought.
Thank you. Curtis, any things?
Yeah, because a lot of our users from day one are actually on-chain market makers and algo traders. And a lot of them are trading in different avenues from on-chain to off-chain, CeFi, DeFi, arbitrage, market making, and also cross-chain, arbitrage kind of trading. And so we understand their need from day one. And last year we launched our BlocksRoute's intent network. So as y'all know, intent is a really good way to solve the problem of cross-chain, because it actually sort of take the solver and like intent in a separate way. So like the things can be resolved like in a very creative manner, and it's a much better use of liquidity in like many definitions. So in our intent network, we're not like making an intent project, but instead like facilitating these intent projects to like have better performance and faster speed. So I'll give you an example. One of the intent project we support with our infrastructure actually is a very good, answer a lot of like good use case in DeFi arbitrage, which is like the time is really important. And we actually make their performance like 50, 100 milliseconds faster. That makes them like their market making and arbitrage like a lot easier for our users and also that intent project. So I think like having this kind of like network infrastructure is actually helping like cross-chain interoperability, like from our definition.
Gotcha. Did you build this in-house, this solver network? Your
Yeah,
intent network?
we have like over 10 like patent technologies. Like we don't have a token. We don't really do smart contract. All we do is network layer technologies, and we're very well known for like low latency solutions in that sense.
Gotcha. Thank you, Curtis. Sam?
Actually, we talk about the cross-chain service. Token Pocket has served like 100,000 users every day for their cross-chain bridge. And we have incorporated our transit finance, which is a swap and bridge aggregator. And we also natively integrate with the secure and the reliable cross-chain bridge service like the Auto Finance, like the Swift, like the MetaMask, like the Changely to provide the cross-chain service to all the like Bitcoin users, Tron users, Ethereum users, and all the Layer 2 users, and also including Solana. And currently, by the way, Token Pocket is a decentralized wallet, right? The gateways of Web3. Our Discover page has list a lot of the trending cross-chain ecosystem dApps here and helping users to discover and interact with the different cross-chain applications within our wallet. Yeah.
Yeah, I think it's a good question, but I think we've already been there. Honestly, I think bridging technology is already good. You've mentioned that you have already 100 million volume going every day. You know, I think the key word is probably abstraction that Sean mentioned. At a high level, maybe it can be a little bit easier to say, I want to be on this chain, get me there a little bit quicker. But honestly, the technology is already phenomenal. And I also think that we're over-indexing because not a lot of people want to bridge, because what protocol isn't going to multi-deploy these days anyways? How many chains is Curve on, right? Like Curve is on 30 and counting, who knows? So the only time you really have to think about bridging is when it really integrates with the chain's features itself. And in that avenue, I think the chain itself is doing a lot. So, you know, I'm not too worried. I don't think Hyperplex does too much for this bridging environment, and we're okay with that.
Got it. On a related question, right? Obviously, cross-chain contributes like the user experience. So on user experience, what do you guys see in addition to what we just talked about as some of the key pain points for people to migrate onto DeFi, like getting more users, more adoption? And what are your specific projects doing to address some of these pain points, aside from what we just talked about on cross-chain? Maybe Sean?
Frankly speaking, I think nearly every isolated DeFi protocol has no problem in user experience. But what we lack right now is, I mean, we need a super app that can consolidate nearly all the features of every DeFi protocols together, and let this super app to be a good entry point for users to play on top of it. And we have already seen the Jupiter as a liquidity aggregator has already been this kind of super app on Solana, but I haven't seen some other super app like product on EVM ecosystem. I know a lot of wallets just want to be this super app, but I haven't found a very successful one at this time.
So maybe just to summarize what you just said, you probably think there are too many options out there, too many choices. You just want an aggregator that aggregates a lot of these things in one super app.
Yeah, when I was trying to achieve a sophisticated strategy on chain, I will probably use at least 5 DeFi protocols. So if we have a super app like Binance on chain, that makes things very easier.
Interesting. Curtis, maybe from an infrastructure standpoint, are there things that you guys are doing at Bloxroute that actually really enhances and solves one of those pain points for the users?
Cool. Like I have a very different point of view from that. I think there are two parts of it. Personally, in a personal point of view, I think like back in 2020, I remember I'm using I need to transfer like some USDT to from Ethereum chain to Polygon chain. And after 10 minutes of research, I found that my best option is to go to a website that actually looks like time traveled from 2005 to 2020. And then I have to trust that to send my 20K US dollar to on that. And then after I submit that, and then turns out it took me like 8 hours to complete the transaction. And in between, I totally lost hey, is my money still there or something? So that kind of scary experience, we've come a long way. That doesn't exist to date. But I think what Alexio from the last presenter said about best of both worlds, from trustless and trust at the same time, is really important. So right now there is still kind of fear factor to, are you keeping your seed phase? If you are sending to the wrong address, is your money lost forever? That kind of fear for a lot of retail users. So I think that kind of issues, we can still close the gap in between. So that's my from a personal point of view. But from Bloxroute, because 95% of our products are for institutions, projects, and stuff. Only maybe 5% are for retail users. So not quite a user experience, expertise from our end. But what we believe is DeFi should be eventually as good as CeFi. And in terms of transactions that we are specialized in, what it means is when you send a transaction online through a wallet, through a trading bot or whatever, it shouldn't get fun run to start with. It should be really, really fast, not waiting 20 seconds or longer, okay? And also, I need to have a peace of mind that it's doing what I asked it to do. So these are the things that we're still working towards with our partners, with our internal dev team. But I think in terms of user experience, my expectation is DeFi should be eventually as good as DeFi in this measurements.
I think you guys also have a private meme pool that you guys launched to actually avoid some of these MEV attacks, right?
Yeah, right. Private, we call private transaction or MEV protect transactions is a huge part of our offering. Right now, I think over 20 projects from DEXs, wallets, bridges, or other applications are sending all their users' transactions to us just to get front-running protection. Okay, and I think that's a huge offering of our part. So so I think that's something we try to enable our partners and users to be able better transaction service to their users. I think that's one of our perspectives.
Yeah, and we got to thank you for that. I'm sure, Sam, you guys are directly interacting with the users, so you probably have a lot to comment on this point about user experience.
Yeah, I think the guys also talk about the mass adoptions, like the super apps. In official ways, I will say, hey, we will enhance our wallet experience and to provide a better DeFi experience for our users. But this is a very normal and it's a very official answer, right? But currently in my mind, that we all know that this is an AI-driven center, right? So in my opinion, it is a time to integrate with the AI to provide a better experience for our users. Currently, maybe only less than 20% of the crypto users are diving into the DeFi ecosystem. I mean, the DeFi is staking, lend and borrowed. So why the users don't want to pay the DeFi projects? Because they don't know how to pay and what they can earn from it, right? So with the AIs, we can provide more professional guide and more professional data for users to know more about these projects. Like you can tell users so who is the investor of these DeFi projects, and you can also gain the data from the raw data, right? And you can also tell the users to analyze what are the DeFi OG users did in the past few weeks or past few months, and to analyze their transactions on chain, and then to provide a fully detailed history or fully detailed guidelines for users to make a financial advisors for users, like, oh, you can do this to dive into the DeFi projects. And that's what the AIs can completely interact with all the necessary information for users to help them to dive into the DeFi projects. Right? So I think that's currently in my mind. This is the incomplete ideas in my mind. But I think we can do more better than what I said. Yeah, thank you.
Yeah, thanks, Sam. Yeah, I mean, consistent to your comment, actually, at our firm, we strongly believe that a lot of the infrastructure today may be built for AI agents in blockchain. So we're a really big believer in this new term, decentralized FAI. Like,
yeah, you know that, like in maybe on Solana we can see a lot of the AI agent meme coins. They are pump, right? But I think the real AI agent currently for Web3, they need to dive into the real users' usage. Yeah, they need to provide more useful guidelines for users to help users to dive more into the Web3 ecosystem, like the DeFi, like the GameFi projects, right?
yeah, Terrence, do you have anything to add on your end?
Yeah, I have a very trader-focused perspective. I think all of you guys have mentioned good points for one category of users, which is around mass adoption. And I guess we come from a very different side, as we are here to help people make money, and so we're focused on people who are trying to be as active as possible in DeFi. And that happens very naturally to us because I guess we are traders ourselves. I've personally done around like 9 figures of notional volume every year in DeFi. So I know that community really well. And for them, they are willing to claw through any level of UX as long as the money is worth it. And so I think that's a different way we think about UX is, if there's 20% on the table, are you willing to put in an hour of work to figure out how you're going to earn that 20%? Because, right, nothing comes for free. If you're willing to put in more work than the other person, you're going to have higher returns. And so for us, UX is all about, right now, it's not the difficulty of using the protocol that matters. It's what yields can you actually get for it, and how do I find these yields? Just to leave us with one example, sorry for rambling, is usual USD. They had a whole fiasco. You can't redeem, whatever. Redemption is harder. But right now, their staking yield is still 10%. That's pretty high. I can understand why that's scary. But the alternative is LPing for USDO and USDC. And that is earning, a concentrated position is earning around 35% right now, a reasonably one. And the funny part is that LP position is way less risky than staking USDO. But people don't understand that, because the moment they see concentrated liquidity position, they're like, that's too much to learn, right? And so the real question is, at what level of yield does that LP pair have to be, where people will finally figure out, hey, I should really just be LPing instead of staking?
Got it. So to my next question, which is like for Terrence and Sean, since both you guys are operating in the yield enhancing space, your project, Sean, RateX, as a leverage yield trading marketplace, can you guys just talk about how each of your projects really help users, or LPs in your case, enhance their return?
Yeah, I think everybody thought RateX is a yield farming hub. Actually, we are actually a yield farming hub, but RateX was initially designed for margin yield trading, but because people like people like trading the future value of those points, so they treated Relax as the yield and points farming hub, and because I think that the first thing we are doing in crypto is tokenizing yield, and then we offer the trading service for yield trading, and we create a principal token and yield token, and that's what exactly we're doing right now. So we're basically I would say it's a Binance for yield. And if you're just trying to farm the yield and points in Relax, you can not only get you can not only get the several points in one click, but also you can earn the trading fee from our users as a liquidity provider. So I think that's the value add of Relax right now. So we're not a yield aggregator or something like this. We're basically a yield exchange.
Thanks, Sean. Terrence?
We think really hard about what you can do on top of the primitives that exist rather than trying to build a new primitive. So there's too many examples. I'm not going to go through all of them with what we do, but one example that's really easy to understand is the way we optimize your UniV3 position. So if you have a UniV3 position, you're earning fees over a series of ticks, and one, that doesn't get auto-compounded because auto-compounding in NFT positions is really hard. And there are auto-compounders out there you can pay for, but they auto-compound the fees over the entire range. What do we do instead? We take a Bayesian approach to auto-compounding, and this is one that you would legitimately take when you're being a professional trader, and it's that conditioned on the fact that a tick has already earned fees, it is more likely to earn fees again, right? And so why would you auto-compound over the whole range? You should auto-compound towards the ticks that have just been earning fees. And there's like math theorems you can reference, Glavenko, Cantelli being probably the biggest one, that tell you this approximates the truly optimal distribution for your liquidity. And so the point is, I don't expect the average user to understand that type of strategizing. But I do expect ourselves to be able to make that type of strategizing easy for the average user to do. That all these math theorems, we can package up together and say, hey, this is the optimal approach, we can prove why, and all you have to do is just deposit in us.
So what would be your sort of a pitch? Why would an LP like myself rehypothecate my tokens with you?
Yeah, I appreciate that question. So we take two approaches. We make sure that our optimizations are non-modifying. So that means when you deposit into us with your UniV L3 position, we don't change your range. Hey, you chose this range. We want to make sure nothing about that, and you have total control over this. I see that as very different than an active manager who just requires a lot of trust. We're gonna, like, active managers rebalance without telling you, they pick the range, and often at the end of the day, after fees, they really don't make you any money. So we put the onus on you, and we just let you say, hey, this is what you want to do, and we can help make that a little more optimal. The second approach is we are very transparent about risks, and for a lot of the optimizations we do, they are not going to be any more risky than what you are already doing. For example, lending market rehypothecation. We take out the ranges of your LP that are not active and just put it into Aave and move it back when the time comes that they actually need to be used. Right? There's very little risk. At this point, Aave is basically riskless, and you just walk away with an extra 2-3%.
But it's still trusting you to put it into Aave.
Yeah. Well, it's all on-chain, so
Okay.
trusting the smart contract.
Gotcha. Maybe Bloxroute. Question for you. So right now there's a lot of talk about institutions coming into the space. A lot of excitement from the likes of like BlackRock, Fidelity. How is like Bloxroute positioned to sort of service some of these new institutions that are coming in? Some of them are high, like HFT traders. Like, how are you guys sort of building your platform, your network, to actually handle some of these newcomers into the space?
Oh, thanks. That's a question that we can like talk for like 3 hours, but we probably have like 2 minutes on this one. So
Yeah, 15, I can give you 15 minutes.
wow. Okay. Cool. I don't think like that's fair to anyone. But anyway, so I think the interesting part is like I can say that Bloxroute has like 20, 30 products, but I can also say that Bloxroute only has like one product. Okay, because as I mentioned, we released this thing called we call the blockchain distribution network, the BDM. Basically, is a like global relay of like highly optimized low latency network, because a lot of the data like getting transferred from this way to another is actually like through P2P network. Okay, and it's very inefficient and sometimes very not reliable. So like we optimize the process, and pretty much I would say that a lot of the existing process, no matter what you do on chain, you are not optimizing it because it's not designed to be functioning that way. So to us, the easy way to understanding is like we are like your phone is running on the 3G network, which sucks like if you're playing games or playing video, right? We just add a SIM card to your phone, which is 5G, and it can simultaneously connecting to your 2 SIM cards, and then whoever is faster, you can take that route. So we just run everything way faster by what you're doing. So that's our basically what we do. And from what you say, we do a lot of like algo traders, HFTs, and like on-chain market makers can make like a lot of money based on what we offer. Because like I talked to one of the head of trading in a big firm, and then like he told me that actually every 15 milliseconds we offer them as an advantage faster, he can actually see it like at the end of the P&L from his like monthly P&L with every 15 milliseconds. And we're giving them something like 100 milliseconds or something like that. So actually the application is very far. And from what you asked, like where we are like putting our like core competence in low latency DeFi to everyone, we're actually doing a lot. For example, last year, we noticed that like, hey, the money is in the like trading bots because of the meme coin market on Solana and stuff. Right now, I think like 70% of the meme coin, like major meme coin platforms and trading bots on Solana are sending all their users' transactions to Bloxroute to get the highest lending rate and like lending speed. So, and like we made Bloxroute from 2023, we have like, I don't know, less than 20 million US dollar revenue. And last year, we're closing our year over 100 million revenue. Mostly because of we are looking at, hey, where our speed and low latency solution can contribute the most, create value the most on chain, and then we make product based on our core competence. That's what we're doing, and I think like I don't have time to talk about our 20 other products, but I think like that's our direction of like seeing where we need low latency DeFi, and we are providing that and build product based on that.
Are you in fact seeing this trend with institutions coming in?
Yeah,
Like,
yeah. Okay, I'll give you one more example. For example, when institutions are coming, a lot of them, like, they're not like seeing like as Terrence see that, hey, we can get like 10, 15, 20% doing what? They're just going, for example, they think that, hey, Ethereum is a very safe bet. So they want to run a high volume of like Ethereum validator, okay, to earn some very stable income and stuff. And they think that believe if we invest in like blockchain, we should just buy a bunch of ETH, something like that. So, but their question is like a lot of this NOC service provider, when they provide service to them, they have a wide range of compliance that like is very specific to the jurisdiction or stuff like that. And then they notice that there's no solution in the market that can do it with like not hurting the return and like fitting a specific like compliance requirements. But we launched something what we call the validator gateway last year, and then it effectively getting like 5 to 8% extra return to like when you're running a Ethereum validator, plus a feature to let you use your own filter of like, hey, I want more than OFAC compliance list. I want another list that fit, I don't know, Japanese jurisdiction or something. You can just customize your need. Technically, it's very hard to do because it involves the builder, the validator, the relay and stuff, but we find a way to solve it. So it actually solves a lot of problem with the big institutions coming to DeFi in a way. So that's one way we're doing it, right?
Thanks, Curtis. Sam, a question on you about wallets. So there's like a lot of wallet options out there for users today. How do you think of balancing what you're offering in terms of security and also like convenience and user experience for your audience?
Yeah, that's a good question. I think currently Token Pocket is one of the wallet that has the most of the asset management methods available today. And for example, we have our native multi-sig wallet features that help a lot of the companies and users to store their huge assets, right? As we all know that maybe there is a hacker attack happened this year because of the multi-sig wallet. But for Token Pocket wallet, for Token Pocket multi-sig features, we are totally natively integrated within our wallets. So users don't need to worry more about the third-party web page attack from the other side. So this is the advantages of our multi-sig wallet features. And the watch-only wallet and cold wallet, and also the most popular features within our wallets, and is also super recommended by our users. For our both mobile versions and Charm extension version, we also support users to use the watch-only wallet and work with the dynamic QR code of the cold wallet to make the transactions totally offline. And besides these two options, we also have the passphrase methods to help users to safeguard their secure recovery phrase. And about the questions how to balance their users' experience and security, like as we all know that this is a meme coin world, right? There are lots of users are using the trading bots, but there is a high risk because the trading bots will store their secret recovery phrase or private keys on live or on their service. Within Token Pockets, we also launched our meme mode for the meme trader, but the advantages is we totally decentralized meme mode trading, and we can also make the transactions within a second. And yeah, we are very committed with the decentralized, I mean your keys, your coins. And with the Token Pockets, for the meme traders, you can trade your meme coins and you can control all the risk keys and you can control your keys within your Token Pocket wallets and yeah, to fully control your assets. Thank you.
Thank you, Sam. Maybe let me shift gears a bit, something that's of my interest. So let me ask you, panelists here, each of you, how are you guys leveraging AI in your protocol these days? I'm very interested to know, since there's a lot of development that's going on almost every week in AI, how are you guys sort of leveraging this tool to help your product experience or help onboard users? We'd love to hear what your guys' thoughts are.
We definitely think that AI should be the most important innovation in this world, not only in crypto. And we have actively contacting some DeFi agents, providers, and see if we can put AI on our client service. And we are actually expecting that AI agent can do more for the DeFi protocol like us. But right now I think it's a little bit disappointing at this time. But but I think the AI agent, especially in DeFi, we should give them some time and wait to see that by the end of this year there are probably some progress here in DeFi in DeFi AI area. Yeah.
Okay. First of all, like AI is definitely not like Blocks Real's edge, or like we're doing nothing about AI. And from we do have products to facilitate the AI projects, but right now I would think that like there's still not enough actual delivered solutions that are solving real problems like in the crypto AI world. A lot of them are just like having narratives and stories to tell that has yet to be proven, like from my point of view. And in terms of applying like AI agents like in our like offerings, I think like we're actively looking for chances to apply that. I'll give you an example. So one of the things that we do is like we need to identify like on Solana, because like on Solana getting front run is huge, and like as a service provider, as an infrastructure provider, we need to figure out where the problems are like appearing, like where the transaction get leaked out and get front run, stuff like that. So we are using an AI agent to figure out like to do like data analysis on, hey, where the data actually got leaked out, and from the entire flow from to leaders and the turbine protocol, and then to different validators where it got leaked out and which are the problems. And then we actively try to like update our whitelist and stuff, so that like there's a feature in our protocol that like when our users are submitting transactions and when they're trying to not get front run, there is the optimal balance between speed and like not getting front run, that kind of protection. So we're using like external tools to try to help to enhance with our product, but we're not actually like creating our own AI agents, and we're not like big in like adapting that like at this point.
Gotcha. So mostly just enhancing your own internal workflows. Okay. Sam?
Yeah, actually, in the past few months, our teams are working on discover about the MCP, and we are also thinking about how can we use the MCP to make users' wallet interactions more easier. So, like for example, I can directly say to my TP wallet, Token Pocket wallet, hey TP, help me to transfer one source to some address, and I just need to enter the address. So and yeah, we are working on we are also working on some AI interactions to enhance users' experience. Just like I mentioned, that if AI can make more guidelines for users to dive into the DeFi ecosystem, that's what we are thinking about. And I think we're gonna release a demos, an AI wallet demos in the upcoming months. And I think that will be a really game changers in this year. Yeah, thank you.
Thank you.
I think AI is the super app that Sean was talking about. It's just so easy to interact with everything on DeFi once you have someone to talk to about it. But for us personally, I think AI agents are going to be phenomenal for more sophisticated DeFi applications. I'm sure I feel this way. I'm sure every founder probably still feels this way, no matter the size of their company. But we would love to sit down with every single one of our users and explain, oh, this is exactly what we do. These are the exact risks involved, and answer every question that you might have about using your protocol. And unfortunately, like 2 years ago when we first came out with our original beta product, that was what I was doing for a really long time, and I just couldn't keep up. And now that there are AI agents, like, we can just make an even smarter version of me that gets to do that with every single person. And so we're super grateful for that development as far as how much it helps DeFi.
Are you guys using it in your protocol at all right now? Or?
So our protocol doesn't use it. I don't think DeFi protocols themselves are going to want AI specifically within the protocol, because there is an unreliability factor. Like, I was asking it for coffee the other day, and it made up a coffee house that doesn't exist. I showed up, and it wasn't there. But I think if you've built AI agents with LangChain before, I think that's a pretty popular tooling setup. I do see DeFi protocols building actions, and just handing those actions over to other actual agent companies. So that's probably the extent to what we would do.
Got it. I don't know if we have time for one more, but maybe a quick one. Can you guys just give your one-word sentence or response around how you think regulation would impact this industry or your project? Positive, negative, and why? One sentence. Sean?
Yeah, positive. I would like to say positive. And I just want the regulation framework can be clear. And that's it. Thank you.
Doomsday, maybe.
I think for us, maybe we just need to make a balance between our wallet service and the regulations. Yeah.
Who knows and who cares? It's DeFi. Who's going to stop us?
All right, thanks, guys. Thanks, everyone, for your time. All right, thanks, panelists.
Thank you so much. Let's give a big round of applause to our panelists. Thanks again, Kelvin, Sean, Curtis, Sam, and Terrence. 谢谢各位嘉宾的分享，让我们对这个话题有更深入的了解。Thank you. Now, let us welcome another guest to come on stage. May we invite Vat Dijen, DeFi lead at Tong Foundation. His keynote speech is titled Tong DeFi 2025. 现在我们邀请我们以下的嘉宾 Vat Dijen, DeFi lead at Tong Foundation， 请给予热烈的掌声，有请 Vat。
Hello, hello. Thank you for this introduction. And actually, it was the great panel before. I always love to listen some new and cool stuff about the DeFi and what people in Asia think what's going to be with DeFi. So, I'm a DeFi lead at Ton Foundation. I'm Vlad Dijen. Dijen I am because I'm the part of the decentralized generation. And today we're going to talk about the DeFi on Ton, the part of the vision for 2025, and actually what's going on right now. So we start our slogan with crypto in every pocket. But then we showed last year that also it's games in every pocket. Then we established a lot of the DeFi projects, and right now it's actually DeFi in every pocket because it's easy for you to use EVA protocol, DDoS, TonFi from your Telegram. It already works. But then in 2025, are going to be savings in every pocket and yield in every pocket. So all of this in this period of time, in exactly this moment, is not visible for us. Why? Because of the US elections, because of the Trump, because of the prices of crypto. You can see what's happening with Bitcoin, Ethereum, with Solana, with Ton, and all of this is very destructive because we are paying attention there. Everyone trying to catch our attention, like look at this, look at this, look at these political changes, look at these prices. That's the market. And that's actually how the people around the market earning money, because they trying to catch your attention. And because of this, we're actually missing the most important part. During the last year, Science Summer of 2024, it's more than 30 new DeFi protocols on Ton. We started from 12 projects, summer 2024, just a year ago. Right now, that's 55. You can jump into the DeFi Llama and you can check. So that's what's important. That's the growth and the development. Then on the gateway, at the November 1st, what I was talking about there, I was talking about there that we do have the ecosystem and we still need to develop bridges, we still need to develop the CDPs, we still need to develop yield farming, derivatives. And what it means like all of the blue that we hadn't, these protocols, all of the green we had, just the 1st of November. What's going on right now? Everything, it's done. So, bridge, layer 0. CDP, 2 protocols already on chain. The Aqua USD and Delaya. Yield farming, a lot of them. The release of FIVA protocol is our yield tokenization. Derivatives, options, we almost done in the core functional layer of DeFi ecosystem. So that's already happened. 2025. That's actually a good question for us. The world is changing. There is a lot of destruction. We keep building. And the question is, what's going to be in this year? So it's not meaningless that I showed you this spreadsheet, because that's actually the DeFi primitives. That's the core layer of the DeFi ecosystem, of each DeFi ecosystem on any blockchain. You can go from Ethereum to Solana to BNB to Ton, any blockchain had the bridge, CDP, IMMs, 3 different types, lendings, LSDs, and the second tier. Without the first tier, that's not possible to build any DeFi ecosystem. But for Ton, is not enough. Why is not enough? Because we are not just a layer 2 or another one layer 1 who is looking for institutional capital and the new protocols and the same users who played on the PancakeSwap on BNB chain who are going to be playing the same games on the Bira chain and on the Sonic. We are looking for retail users from Telegram. And that's why we're different. And that's why, for us, this is not enough. But what's enough? What do we need? So, the first, what most important for each DeFi ecosystem, that's a real yield layer. That's the layer of the protocols, a layer of the projects, where actually the yield is coming from. There is only a couple yield generation events in each DeFi ecosystem. Let's count them. Commissions, that's the first one. The second one, it's chain emission. And the third one is RVA. So regarding the Ton blockchain, we do have chain emission, the Ton stakers, BMO, Hippo, LSD protocols. We do have the core layer. And what else we need? We need RVA solution. Anything what is tokenizing yield, we are looking for you on Ton. And that's the most important part. Actually, that's the most important part for any blockchain, because during the bull market, during the bear market, everything do you need in a DeFi, it's a yield. And the chains competing between each others, we can see the metrics like TVL, we can see the metrics like volume, but under those metrics, the most important is a yield. That's actually the opportunities, what a chain could offer to you, to your liquidity. And that's our base layer. So we don't need RVA tokenized yield, we don't need yield-bearing stablecoins, and staking and farming vaults. That's the base layer of the yield generation applications. Then, what I showed you before, the functional layer. It's the bridges, lendings, DEXs, swap aggregators, yield trading, perp DEXs. That's all of the functional layer of the DeFi ecosystem, which actually allowing us to use and to distribute this yield. And the final question here, to distribute to who? To retail, but how? Because all of these applications, this layer and this layer, they are very complex. That's impossible to use them for the new user. That's impossible to explain for any newcomer that this is the impermanent loss, this is the seed phrase, this is the wallet, there's a lot of the buttons you could push, and then you will push another one by misclick, and all the funds is gone. So it's very hard. For this, we need to have the retail Ton mini apps layer of the applications. And that's actually the last part. There's applications like banking apps, neo-banking apps, saving applications, PayFi wallets, and yield gaming. And that's the combination and the final look of the ecosystem for the Telegram. Again, why? Because here we can generate the yield. Here we can distribute this yield and give the functions on this yield, like leverage, for example. There is no market will survive without the leverage. And here, that's the distribution layer for the retail users. Just one simple button, save or invest. But behind this one simple button, we need to use, let's just figure out, we need to use swap aggregator, we need to use DEX, we need to use yield trading, sometimes lending protocol, and one of the yield generation events, just to enable one simple saving application. That's why we need this part of the ecosystem and this division between the layers. So that's actually what's going to be in 2025, and that's what we're looking for. We're looking for a yield layer, and we're looking for real tone mini apps layer for retail. Thank you.
Thank you so much, Rand. Thanks for your insightful presentation. Please be seated. Thank you. That's deepened our understanding of Tone DeFi ecosystem. Thank you so much. At this time, I would like to invite our panelists to join me as we explore crypto secondary market through panel discussion. 接下来我们会进行圆桌讨论。我们请给予热烈的掌声，邀请以下的专家嘉宾到台上。我们请 May we invite 李亮 HashKey OTC CEO, Mohammad Amizad, Managing Partner IOSG Ventures, Jenny Zhang, Partner of Animoca Ventures, Watson Chan, Director of Crypto Business of Futo Group。他们圆桌讨论的主题是流动性手册、加密货币二级市场的机构策略。The topic of the panel discussion is the liquidity playbook, institutional strategies in crypto secondary markets. Please.
Good morning, and thank you for joining our panel today. We are entering a new era. We have seen the tax tariff has been escalating. We have seen geopolitical tensions unfolding like in different areas of this world. So in this point of time, properly manage your liquidity is more pressing than ever. My name is Leo. I'm heading the HashKey OTC business, and we are glad to have our panelists on stage to join us with our today's discussion. Could you please introduce yourself and tell us a bit more about the things you are working on? Let's start with Momi, please.
Yeah, thanks, Leo. Hello, everyone. Momi here. I've been with IOSG Ventures since early 2020, and I now serve as managing partner.
Hi, everyone. I'm Jenny from Animoca Ventures. I've been with Animoca since 2021, and I'm currently a partner on the investment side, mostly looking at C-stage deals, but we also have a separate liquid pocket.
Hello, everyone. I'm Walton. I'm Director of Crypto Operations of Futu Group, and apparently I'm among the core team. I'm co-leading the visions of the group to implement crypto trading businesses into our existing range of business lines. Yes.
Cool, thank you. Let's jump straight into the core questions. So when exiting large positions, how do you allocate trading activities across different venues like SEX, DEX, and OTC markets to ensure minimal negative impact on token price and also market conditions? What are the advantages and limitations of each trading venue?
I think, obviously, if the project is listed on top-tier centralized exchanges, and by top-tier, I think mostly of Binance, Bybit, OKX, Upbit, everything is much easier. It's much easier to do OTC. It's much easier to wait for the SEX exit. But if there is no good SEX listing, I think every option becomes much harder. And then, if your only viable option is exit via DEXs, it's usually it usually means that it's not very easy to exit in a large position, right? So in those situations, I think the best way is to approach it with some time-weighted average approach or use market maker services to do it in a more granular way to not impact market price with the exit activity. But obviously, assuming that the project is listed on one of the top exchanges, exiting directly on centralized exchange or via OTC, I think both is fine. If it's an OTC thing, I think it also needs approval from the founder side because it's somewhat sensitive, especially if you're doing anything in the large size. So I think it's important to kind of collaborate on that with founders, and also I think sometimes the best thing is in crypto investing is to be angel investors, because they usually YOLO and they don't think about the next deal. They don't have like a 5-year view about the fund reputation and so on, but we have to take many things into account. So sometimes, even though we know that this might be like the particular timing might be the best timing for exit, we have to take into consideration many other factors, and also our relationship with founder, like the impact it could have on the project success, what kind of branding we want to build. Do we want to send a signal to the future projects that we are exiting in a certain way or at a certain timeline? So this all needs to be taken into account. But if it is just for liquidity discussion, I think a centralized exchange or using some sort of market maker services to exit in such a way to avoid impacting the price negatively, but obviously with agreement from the team itself, is something that makes most sense.
Thank you. And Jenny?
Completely agree. I think the top options is definitely if the token is listed on a top centralized exchange. I would say Binance probably still has the deepest liquidity, followed by a couple of other main exchanges, which also has decent liquidity. And usually, we try not to exit through DEXs because there's also like a very negative connotation if people see you, because it's all very transparent on chain. And if they see an early investor selling partial of that, it could be very normal because we need to return capital to our LPs, but it could spiral very kind of bad PR. So we tend to avoid that. And then in terms of OTC desks, we do work closely with a couple if they are kind of reverse inquiry or interest on our existing staffs. But obviously that needs to go through the blessings of the team. And in the past, I think when last year market was very pumping, actually founders were very open to OTC transactions because it helps them re-anchor the price levels. So it's more healthy for their kind of distribution of investors.
Talking about a soft, right? Are you seeing growth demand for secondary trading of soft before TGE? What are the key challenges and also opportunities exist in this space? Jenny, you might want to take that one.
So the short answer is right now, absolutely not. But I would say last year was a very good year for OTC markets. And I think these type of things fluctuate very wildly with the market conditions. When we're in an upcoming upward market, saying BTC moving very quickly from 70K to 100K, then you see a lot of people actively bidding for these OTCs. But when we kind of hit a roadblock or the market is just very fragile, there's absolutely no demand for OTCs unless it's a very steep discount. But for most investors, I think if the discount is too large, then there is no motivation for us to transact.
Right. And Momi?
If I can follow up on what Jenny mentioned in the previous answer, like about founders being open to help facilitate OTC opportunities in last year, I think what I kind of observe is that among founders that have been through few cycles, and especially founders that are doing second or third startup and have like a experience running project, they're actually very actively managing cap table because they are aware that this is something that is healthy for the company, because like they're trying to anchor the price higher, and they're trying to first get rid of everybody that came in the lowest price to reduce potential sell pressure. So I think for some first-time founders, this is often like controversial topic to discuss, but for founders that are multi-cyclers and have already experience running projects, they're actually very aggressive sometimes. They even try to push some early stage investors, say, guys, I found OTC opportunity. I want you to take this because I think this is best for managing expectations and so on. So I wanted to follow up on that. And the second question about the soft market OTC, right? I think even in this market, we also represent demand side for some deals. I think we often check with some OTC desks for particular projects that we find are actually doing very well and that we are positively surprised. We would also be kind of asking, but I think in this market, the expectation for the discount when entering OTC deal, especially OTC deal in a sense that we are talking about locked position that is locked for 12 to 18 months. I think the requirement for discount is very steep. So usually people are talking about discounts of 60, 70% even. And I think for projects that are listed on top exchanges and where the vesting is maybe 12 months, the market discount recently has been around 50% compared to some time-weighted average price. But yeah, the market in general, obviously, there's a lot of bearish sentiment about quote-unquote VC tokens. And I think VC token narrative and kind of label is misguiding. I think what is the real issue with this quote-unquote VC token is that they are low-flow tokens. So I think that the key issue is being the low-flow token, and low-flow tokens had a lot of success in the previous cycle, but now the people learn that FDV is not just a meme, and that this is something that they need to pay attention to. And in this cycle, I think low-float meta remain, but the market learned that low-float meta is the bad one, and nobody wants to play it. So I think that's part of the reason why some of the this soft market is not as active as it may have been previously, and why the general altcoin and new token listing didn't perform very well, because too many projects optimized for high FDV at start, and then they basically are down only. And I think a lot of projects, even the ones I talked to, they're afraid to start with a higher float because they also don't have confidence in their own project, right? So a lot of them, they use consulting services to help them manage supply or try to showcase artificially high supply, but actual real supply is much lower because they are not ready to face the market. And this is the problem that this industry has to resolve in order to make it much more acceptable for retail and even for VCs and for exchanges to kind of go forward.
Thank you, Momi and Jenny, for the sharing. Let me jump ship a bit. We see that the geopolitical tensions have been rising. Trade war has already started, right? And then different countries have different response to President Trump. So on that front, I want to ask Walton, what is your take on this macro environment? And also, what do you see, whether the crypto-friendly attitude from the US will change somehow?
Okay, thanks for asking this. I would say, to put it in context, I would like to introduce to you guys about how Futu Group is doing at the moment, right? Futu is now in the 12 years of business, and also we are actually operating an international financial services and investment platform across 7 countries so far. And actually we are having the plans to keep expanding that kind of exposure. And also, we also noticed that for what we have been doing, the the aggregate number of users subscribing our platform through the flagship brand of Mumu and Futubu is exceeded over 25 million. That is quite a big amount of people using our services. And up to recently, we are already having the idea that in Hong Kong, for every 2 adult users, one of them is using the crypto, is already using Futubu, is a Futubu user. And in that context, as you said about the geopolitical kind of news that hits the market, actually for what we know about retail or like institutional clients, they love volatilities, right? That's the whole point of going to the market, to profit from what they believe, how the things should go, right? And for us, it's more like a one-stop investment platform service for them, from one access to another. If they, for now, before that hitting of the news from the US, and as you guys understand that for the traditional side, the stock market in the US is doing very well, and they make very good use of the information that we provide on the platform and make the trading there and make the gains accordingly. And of course, when things happen, they switch to other places to trade. Then actually when we launched crypto services in the second half of the last year, actually we also see the growth in terms of the turnovers. And also that also we can believe that some of the flows are coming from the capitals that is from the traditional asset side. When they happen to know that, okay, we are compliantly operating the crypto business, and with the tokens that can be traded, there are capitals coming in, and we also see some explosive growth in terms of the turnover in the fourth quarter compared with the third quarter when we first launched the service. So what I mean is here is like, when it comes to these kind of volatilities and these kind of new market opportunities, I think the clients are generally very welcome to these kind of changes. And also what happens is they want to stake into the kind of access they feel comfortable to put money in. And also, when it happens to switch back, they also have that facilities all being able to be done in a single app like us. So I think for that one, for our role is to keep things really simple, very comfortable, very accessible for them to make the switch as needed. Yeah.
Thanks, Walton. We get back to topic about how VC manage the token liquidity. So maybe I back to Momi. How do you communicate with token issuers regarding secondary market operations to maintain good relationships with them? And what are the best practices when planning significant liquidations?
I think the best practice is definitely to be direct and transparent with the founders about the intention, about like the reasons. Even if you are for instance, the reason could be the managing fund cycle, or it could be that you just feel confident about project, but the market is just overhyped, or it could be that you are disappointed with the project progress. I think like all three reasons are reasonable, and depending on the situation, I think it's always best to be very direct about the reasoning. And I think sometimes in these situations, obviously it can be emotional because founders and investors, especially if you work very closely with them and if you've been through a multi-year, multi-cycle journey, it can be can have like emotional reactions. But I think like for as I mentioned, like some of the more experienced founders, sometimes they even come to VCs and they're like, we are organizing, we have now interest from these institutional investors that are looking to invest. We think that the best is that we take everybody from seed round at this price. You yes or no, like you're in or not, and they also say their preference, right? But I think exit is tricky part because of this emotional part, reputational, how to manage the expectations from the community, how to manage expectations from founders. So you have to have like soft skills and like this emotional intelligence if you want to do it in a proper way, not to jeopardize anything. But I think even though like if you think you might be having some negative emotional reaction from the founder, like the best thing is just to be upfront and direct about things. And then if your arguments are rational, they always, usually always understand, because at first place you don't invest in people that are not rational, right? And if you come from an honest position that is well argumented, people tend to understand it.
Cool, thanks. And Jenny, your take on this?
This is a tough one, like managing liquidity from a VC side. Sorry, I just want to clarify. Do you want me to go deeper onto how we measure treasuries or our positions that became liquid?
So the question goes like, what are the best practices when you're planning like a significant liquidation? Let's say you have a big positions in some projects.
Okay, so maybe I'll direct that more on the investments we've made. So I think whenever there is a bigger position that we want to get out of, the first thing we do is we will notify the project, because we definitely want their blessing and we want to be transparent. And most of the time they will either through OTC deals to see any existing investors want to top up, or they can see if any new investors want to come in at a slight discount, such that we can manage the price impact quite well within the market, as well as the sentiment. Because I think right now there is a common misnomer where the market views any selling by VC as dumping the market, but maybe it's just, you know, normal kind of fund structure where we ultimately need to return capital to LPs. So that's our first go-to, is to speak with the project themselves. And another one would be also outside OTC desk to see if there's any demand for this large position. And thirdly, after getting the blessing from the foundation, and we will monitor kind of the daily liquidity volumes. Usually, I think if the token is listed on bigger centralized exchanges, there shouldn't be a problem for us to slowly kind of sell over a period of time to like TWAP.
Cool, thank you, Jenny. I have a follow-up question on this. People are saying, like, during the past 2 years, as Momi just now mentioned, that the VCs, like the so-called VC tokens, probably like disappointing to some extent. And when I speak with some of like the US funds, right, and if we can monitor in the market, the fund size getting larger and larger, and it's getting even more difficult for them to deploy into the VC projects. So that's something we have been observing. So like specifically for your fund, like for the next phase, are you going to, you know, spend more time, maybe, you know, to build up like a strong strength in the secondary market investments, or like, you know, the VC sort of a token deployment, it's just for like a temporary?
I think for the VC side, if we do have a next fund, it will probably be a smaller fund than our current fund, because I think it's just in crypto naturally, because most of our LPs are non-crypto native LPs, and they expect a much higher return versus traditional fund managers. Because of they view the risk and the volatility that they had to take on to come into crypto. And in order, we did kind of a back calculation, in order to achieve these level of multiples and returns, if you are a fund that's above 100 million, it is very difficult. It is very difficult, given the vesting period and given the market liquidity. And just from data, we see that actually a lot of the well-performing funds in the past, a lot of their position has been from more like liquid positions like Solana, Ethereum, Bitcoin. And Bitcoin definitely has one of the best runs last year. So I think if it makes more sense to have a blended strategy where you have some VC positions and you also have a liquid book.
Yeah, I think like if you go back to 2021, in 2021 everybody wanted to do crypto VC, right? Like, and I think like 4 years after, like many institutions that were doing VC back then, like are not doing it anymore. And at this point of time, I feel like crypto VC environment in general is quite bearish. One of the more bearish periods that we had in this like in this industry, like for crypto VC. But I feel like that's also good thing for being a crypto VC if you survive and if you still have capital to manage, because in hindsight, 2021, when everybody wanted to invest and be crypto VC, was the worst year to deploy capital in a VC industry, right? So if you want to go from like this contrarian philosophy now that everybody is discussing doing the secondary fund and like doing just Bitcoin and memes or like anything of that sort, like and people are trying to take a step back from the VC business. What is the implication? Implication is that you get much less competition, you get much less capital in this industry, the valuations become much more reasonable, you get much more leverage. And if you still think that this industry has innovation to offer and that there is like innovative potential in this industry, why would you take a step back from this industry at a moment where you get much more leverage, you get much better valuations, and just take this perspective. 2021, everybody wants to do it, but in hindsight, the worst possible year to deploy any capital. Like even if you are brilliant 160 IQ person, like look at Paradigm, like they invested at the absolute peak for OpenSea, absolute peak for XC, absolute peak for FTX. And these are like extremely smart people, right? Like, and then imagine everybody else in the industry that it might not be as sophisticated and as deep, as good understanding as them, right? So I feel like at the end of the day, like this industry requires a lot of character, and it's not just this industry. A VC job like requires very specific character, and I think it's not about IQ. It's more about this character and being resilient, because no successful VC story came from investing in something when it was a huge hype, right? Like every successful VC story comes from being contrarian and doing something in the moments where there is no hype. So I think like whether this technology and industry offers high quality talent and innovative potential, I think is yes. Is this market sentiment? Everybody is bearish? Yes. Why would I withdraw now, right? Like this is the time where you have much more leverage, and I think these are the opportunities that everybody waits for as a VC, like to have to run the table, to have the negotiation power, to have the leverage, and I hope that with this mindset and hard work, research, aggressive deal sourcing, we can find very good opportunities in the next 12 months.
Thanks, Momi. Next question will be also quite specific. So when market liquidity suddenly decrease, how do you adjust your trading strategies to ensure that you can still exit some positions when necessary?
I think in crypto, like these moments of liquidity are very transitory, and like for everybody that's been many years in this industry, like I think this is kind of common knowledge. So at the end of the day, if you don't use the good timing to exit, in bad timing there is not much you can do, right? Like you can use the best OTC desks, you can use the best market makers, but if there is no demand side, it doesn't matter at all, right? So I feel that's the challenge, and also challenge for many people that in the bull market, the human psychology, and many people I meet are always like talking about the next target, and it's very hard to give up like when the market is sentiment is high. But again, it's about having the character, discipline, and doing stuff that are against what your kind of human nature is asking you to do, right? So if you are in a bad market environment, it's definitely not time to do too much exit, or like unless obviously you already gave up hopes on this direction project. Like there are particular cases where there would be some market liquidity, but if the market liquidity is gone, what can we do?
Thanks, Momi. I will go to Futu, this one.
Sure.
As a leading tech brokerage firm in Hong Kong, what are the key needs or like concerns that Futu has observed among investors in driving the adoption and the mainstream of Web3 ecosystem, and how does your platform enable them to participate in this market more efficiently?
Okay, thanks for raising this. Actually, for us, okay, you guys talk about the liquidity issues, be it for the retail or the institution clients, whether they trade following the trend or just opposite against the trend. Actually, for our role is more like a facilitator role. What I mean is like, because we have a platform, we operate a platform that welcomes all types of investors. I think there are three things. There are three S that we actually notice from the needs of the investors. The first thing is about simplicity. That's the first S. When it comes to platform access, probably they want to look for the insights or like the intelligence of a certain asset or a certain sector of the markets. And then with that information, and they happen to be trading again with those information collected, what we are offering now is a one-stop. So where you get information, you make the decision, you trade all straight away into one single app. It's gonna be a seamless kind of experience that we want to make it really simple. No need to switch apps to get all the trading decision done. And also, apart from that, when they need certain kind of support, then we are there to help them too. We have customer service 24/7, working round the clock. And also, if they want to meet us physically, we also have some established some physical stores that we are having the plans to open in many like busy regions to help to facilitate the needs of many investors, be it young investors, experienced investors, simple ones, more sophisticated ones. Make sure that they can reach us electronically or physically is no problem. We're going to offering that kind of options. Also, for our side, for what we need to do is we committed to offering the best trading experience for whatever kind of investors. So when it comes to digital assets offerings, we're trying to align the kind of experience as good as that they have been experiencing in the traditional side of the assets trading. That's the first part, that's about simplicity. The second is about addressing the sophistication of the user needs. We did talk about the needs that when they need help, they can reach us. Yeah, and also we also are aware of the kind of tools needed to help facilitate their trading needs. For example, for us, maybe we do a lot of order booking, automated kind of trading, but it comes to about like larger size of trading, whether we have the facilities like the OTC or whatever, this kind of service, we remain very open-minded in terms of launching these kind of services to help address the needs over there. Because for them, whether using the desk is not institution clients exclusive. Sometimes for some retail clients with that kind of understanding, they may need to use that kind of facilities in order to execute the prices better on trading. That is something we kind of understand and listening and trying to see what we could do. And also, we also have certain functions on the app that we can maybe later finding ways to put into the crypto side too. Something like, we have those auto rebalancing kind of features that we use on the mutual fund side. Maybe someday it can be implemented to cover the crypto side as well. So to make the decision sort of more easy and sophisticated enough to achieve the kind of trading objectives that the users want to have. And also, we also emphasize on the kind of education of the crypto too. So for us, like we have been, for those being in the business for long enough, of course they're very familiar with those operations, but for those very experienced in the traditional side of the assets trading, they may need certain kind of assurance or confidence, right? For example, for the compliance, for the regulation side, how the progress is like, and also like what kind of things they can do, or like under what sort of assurances they can get when it comes to trading, and what kind of tools they have. That's what we are trying to do. We are offering as diverse kind of options of investing for them, and also we also give education from time to time so that they know exactly what is happening. And when it comes to trying to get in touch with like business incubators, like these token issuers, et cetera, with that kind of education being obtained, they will be more willing to reach these kind of parties to get to know how to invest, how to diversify further their portfolio. So these are something that we can do very well, we can focus on, so that when people come to find the end users, or when the users come to find the issuers, they can use us to leverage our resources to get closer contact, building better relations, and sometimes maybe when things get really well established, then the liquidity side will be improved as well. As a result, when there are fluctuations of prices, with this kind of coordination, this kind of progress being done, then we will see better liquidation as a result. That's going to be beneficial for even for the large size traders or the smaller size traders are going to benefit a lot from that. And that's the second thing, sophistication. The third is about the security of it. Security, when you say security, is about, as we always state in the way we operate our platform, we want a compliant, we want a licensed and safe kind of trading services being offered to digital asset trading as well as the traditional asset side. So when it comes to safety, it comes about maybe the compliance progresses, right? This is something we could do, for example, to align some compliance progress with some prospective investors or customers, okay, so that they will have a better idea about it. And also, we may also explore the ways to better do the custody of the large amount of assets. Given the kind of regulations we have, they may opt to have something more specific to tailor their needs to fully protect their assets. We have some things to do on that one. And also there are tools as the regulations keep going forward. Maybe there are tools that can help hedge their crypto portfolios. There are something that we are putting more resources and attention to. And so for these kind of three things, the simplicity, the sophistication, and also the security of the platform. That's all the things that we are having that in mind, and that's how we're going to address that. And for the plans that we are doing now is to keep improving the trading features, increasing the different kinds of orders, make it really smarter, simpler for users to trade. And also we want to add more trading data insights for them to analyze, and then when regulation allows to allow more algorithm kind of trading, that when it comes in, then it should improve the flow of the capital within the market, and also through our platform, the one-stop platform, to make the responsible flow of transfers between assets. That's going to be more likely to be possible as well. And also for our plans, it's going to expand the market to more regions on the crypto services too. That's the kind of commitment we're going to try to do now.
Thank you, Walton. And very quick, the final question goes to Jenny. How do you think crypto VC secondary market trading strategies will evolve in the next 1 to 2 years? And what emerging tools or practices might change current position management methods?
Got it. So we've been pretty vanilla to this point. So when we have unlocks, we may see how we can sell that on the open market, or we'll speak to say like OTC desk and see how we can facilitate that. So it's been fairly vanilla, but I know that some funds, they would do kind of perp or put options to hedge out their locked positions. So at this point in time, we don't do it because we felt like the market is not mature enough. The liquidity is not, well, the liquidity is there, but it's just, the funding rates can really kill your returns, and the capital you need to put up in order to kind of have that hedge on just doesn't make sense for us as a venture fund. So we haven't done that before, but we would like to see as the market matures that these tools become more valuable to VCs, especially on the put option side. I think majority of the alts that we have, I don't think they even have an options market.
Great, thank you, Jenny. And with that, that concludes our panel discussion today. Thank you for your participation. Thank you.
Thank you.
Thank you so much. We are deeply grateful to the panel for raising our understanding of this topic. Thank you so much. Please be seated. Thank you. 谢谢各位嘉宾的分享，你们的独特的见解让我们有更多的了解。谢谢。Ladies and gentlemen, that will be all for the subforum of Crypto Finance. Thank all the speakers again for your excellent speeches and the audience for your participation and patience. 各位观众，2025香港嘉年华加密金融主题论坛到此结束。再次谢谢各位嘉宾的精彩分享，还有观众的耐心聆听。We will focus on the GameFi topic in Substage 1 this afternoon. 今天下午分会场1日程会聚焦互动娱乐主题论坛。 Besides, you can collect stamps by visiting the booths of the organizers, title sponsors, platinum sponsors, gold sponsors, primary, secondary, tertiary exhibition sponsors. When you collect a certain number of stamps, you can claim a gift at the information desk. The number of gifts are limited. That will be provided on a first-come, first-served basis. 另外，在会看手册的赞助上的 logo 页，主办方 title sponsor 及所有 co-organizer 白金、黄金、1级、2级和3级赞助上的 logo 下方均有一个盖章处。活动期间及其任意区域内所有账上的印章，即可前往咨询台领取对应礼品1份，每人每天限领1份，数量有限，先到先得。Thank you all and see you all at 2 p.m. 我们下午2点见。